Okay, we're going to take a look at the standard financial statement, which is a requirement for all regulated entities to give to people who are having problems repaying debts. What you're looking at is the AIB one, permanent TSB. There's, you download it from the website. Bank of Ireland have the same thing. The important thing is that the actual outlay of the questions is identical in all of them. In the background, I'm working with an EBS standard financial statement. So just to get going on what you're going to be asked for, if you're a PAYE worker, you're going to have to complete the standard financial statement, give 3 months of current account bank statements, and probably 3 to 6 months worth of pay slips if you are on unemployment. If you're self-employed, again, you'll have to fill it in. You'll have to give about 3 to 4 months of current account bank statements, a revenue balancing statement, and 6 months of your business current account statements. Revenue balancing statement is there to show how much tax you paid, and that's basically what they'll take as being your income, unless obviously they see something contrary in your account, because it can obviously change from year to year. And the current account statements for the business, again, are giving an indication of your cash flow. If you're unemployed, you'll have to fill in the standard financial statement, give 3 months of current account bank statements, and 3 social welfare receipts. Starting off, you're going to be asked for some of the general terms, such as your name, your mortgage account reference number. You'll be asked for your outstanding mortgage balance. A bank has a lot of this stuff, so some of it doesn't necessarily matter totally. You will be asked for your correspondence address right there. That's an interesting one, because if you give a correspondence address that is different from the account that you're meant to be living in, it could mean that your house is no longer dealt with as being your primary home. Now, under the Code of Conduct on Mortgage Arrears, a bank can only give you 3 unsolicited contacts per month, and that is also echoed by the Consumer Protection Code of 2012. It's important, therefore, that you have your home telephone, your mobile, work telephone, emails, etc. are accurate, because if they are trying to contact you, the one downside of this is that engaging with the lender means corresponding with the lender. If they're trying to reach you and they can't, then it can turn into an issue. Another thing, obviously, that they look for, the number of children. They'll look to see, for instance, child benefit payments coming in, etc. If, for instance, you say you have kids and they don't see that, they may suspect that you have a bank account elsewhere, and it may make the process a bit trickier. So it's important to make sure that you're showing all the evidence so that this can come to a good and full conclusion. There's also questions about your employment, your occupation, whether it's permanent or not, etc. These questions are all labeled, as you can see, A18, A19, A20. The reason for that is that they are literally identical across every lender. Every time you see A14, that will be a question about children. Every time you see A20, it'll be a reason for the arrears. Collectors will actually refer to it as the A20 was X. So it gives an idea of how standardized it is across all of the institutions. The reason for the arrears is a very important one. A lot of times people say that the reason for arrears was they got a pay cut. But typically, from a collector's point of view, they say, well, you got a pay cut of €400, so why did you go from paying a €1,200 mortgage to paying zero? And that's really where the issue arises with a collector, that they sometimes come across as being mean, because it could actually be the reason that you've stopped paying, but in their mind they're saying, well, you should at least be making a partial payment rather than going right down to nil. Now, when you look at your monthly income, it's important, again, in this area, a mistake a lot of people make is that they, for instance, put in net amounts rather than gross. You'll also see that B9, which looks at monthly income from property assets other than your primary residence, that would be your case 5 rental income, that people put in their net rent by taking off various management charges, etc. That is not what you're meant to do. You're not meant to give an idea of your income post-taxation or post-cost. It's before that, because Section C will take into account all of the expenditure. So again, when you're filling this out, save yourself multiple correspondence with your collecting agent by filling it out in the prescriptive manner that it's drawn up in, which will bring you down to Section C, which looks at all of your costs. Now, this is broken down quite comprehensively. You've got obviously your utilities, your household costs, transportation, costs of your primary mortgage, education, etc. Other costs. Getting back to B9, and I say this just because we have a lot of clients obviously who do have rental property, where you look at property service and management charges. any kind of rent being paid out. You may be paying rent, you may have maintenance paid to a separated spouse. These are all things to pay close attention to. One thing I would say is that collectors generally don't look for your utility bills. Now, if you turn around and say that you're spending $400 a month on electricity, they're obviously going to look for it because that would be quite unusual. But up to certain amounts, they don't question them. So I think one thing that is fair that people could do that isn't bending the rules is take your highest electricity bill to give yourself some room for maneuver and use that as your standard. So it's not breaking the rules in my opinion because it is an actual bill based on fact, or else what you could do is add all of your bills together for the previous year and get an average. But again, it's not saying that you should try and cheat the system, but it is saying that you can do things within the standard financial statement that will at least give a few quid, whereby if you did get a higher bill, you're not being glued into something by taking, for instance, the lowest bill, like a summertime bill. Other things that they'll look at would be your C8 section here on childcare. For instance, if you're unemployed and you're paying childcare, that would be something that the collectors will have an issue with. Elderly care, section C9 is something that is generally not questioned. They would never say that you're spending too much on caring for a parent, nor should they. Having said that, you will need to provide evidence of it. In transportation, something that is closely looked at would be, for instance, motor insurance. Whether you have two cars, for instance, if you're living in the city centre and you have two cars, a collector will want to know why do you have that, which comes at obviously the cost of insurance and tax. It could be a case that you have a disability improved car, but if it's a case that you simply have two cars and one of them isn't being used, then they will actually look for you to liquidate that as part of the negotiation process. If, however, you own two cars and you live up a mountain somewhere where the nearest shop is a drive away, then it's not going to be a factor. So that's just something to bear in mind. In terms of any other things on there that are jumping off the page, no. So we'll go on to further sections in section C, which it gets right down into the late 20s and into the 30s. They will look at maintenance. If you're paying any maintenance, for instance, to a spouse, or if you have maintenance for a child, that again is something that you need to show clearly. They may look for just a evidence of the agreement. Typically, that's not such a big deal. They assume that you're paying that money because there is some kind of legal agreement there. And then you're on to your section D, which basically goes down and looks at all of your monthly outgoings. Now that's sideways on that one, as I think it is on all of them, because that's a big awkward page. Oh, look at this. This is the AIB one here. They do a very nice job, but it's actually laid out portrait style. On this one, again, a lot of this will be taken and looked at via what your bank statement is saying. So if you say that your mortgage is $1,200 and your bank statement only shows $1,000 going out, and there hasn't been some arrangement that the bank know about to now, that could be something that doesn't make sense, that they need to come back on. They look at court mandated debts, they look at the credit union. One thing that is obviously a big issue, and we see this a lot, for instance, with people who are police or firemen, is that the credit union sometimes actually gets their money before the person does, whereas with most members of a credit union, you receive your wages and then you deal with your credit union. And a lot of the credit unions, although they're an unsecured creditor, actually have better security than the banks because they get at the person's wage packet before them. If you happen to be the member of some institutional credit union that has that kind of capacity to do wage deduction, that can be something that will be an issue, because obviously it is viewed, and it is a responsible view, that your home debt and keeping a roof over your head is a higher priority than paying off your local credit union, despite all the good work that they do. Section E will be about other assets other than your primary residence, and then section F is about your non-property assets. So that could be things like savings, shares, cars, any kind of lump sums that you might have. And then what you do is you get down to your section G, and it starts to all be totted up. It's very much the same as what you would do perhaps if anyone out there has ever filled in a Form 11. The guiding principles for standard financial statements are listed out, and it's the same 10 things with all of them, and they all point you to the same website, keepingyourhome.ie, which is a good website, by the way. You should check that out. And it just says that it's there to give an overall view, that it's important to fill it in accurately, etc. If you are having problems filling them in, call your collections team with whatever bank you're with. It is a requirement by law that on a home page with any lender that they have a very noticeable section for people who are having problems with paying their debts. So on permanent TSB, for instance, mortgage difficulties down there on the left hand side. I don't want to go to the Bank of Ireland URL, but suffice to say that they're all there. Anyway, this should give you a good idea of what you need to do to fill in a standard financial statement. If you have any questions, you can give us a call, and of course we're always happy to hear any additional advice that people may have. Thanks again.